Hello everyone, I Sage welcome you to the Executive Corner Expert Talks 20 minutes roundup live today with Mr. Ryan Legudi, the Managing Director of Salter Brothers Emerging Companies. We bring you industry leaders, successful business owners, market and equity advocates all under one roof to help you discover the insights of the stock markets and help you understand how you can create multiple passive income streams. So today we're very lucky to have Mr. Ryan Legudi, the Managing Director of Salter Brothers Emerging Companies. And to give you some background, Salter Brothers is a global fund manager with a focus on alternative investment offerings across specialist property, credit and private equity. So welcome Ryan, it's a pleasure meeting you. Ryan, this is an exciting time to meet with you. Your new LIC, Salter Brothers Emerging Companies, has hit the market to raise 20 million Australian dollars in an IPO. How do you plan to utilise the IPO proceeds?
Yeah, thanks for having me join, Sage. We're a listed investment company. At the point of IPO, we will actually list with an existing portfolio of investments. So those investments are focused on the emerging companies segment, and any additional capital that we do raise at the IPO will be deployed into additional new equity positions as well as strengthening existing holdings.
Fantastic. Well, we are going to be watching this space and we can't wait to see how your projects will progress. You invest in the listed and unlisted companies with market caps of less than 500 million Australian dollars. Can you tell us more about your investee companies and what is it that you look for in them before investing in them?
Yeah, that's a good question. I suppose at a high level we do invest into both public ASX listed equities as well as private unlisted equities as well. So they're actually quite different beasts, and our approach to each of those investment classes is quite different. However, there is an underlying fundamental approach that we do take, and that is really a bottom-up analysis of a company, of an industry, and we really do try to focus in on areas of our core competency. So what that essentially means practically for us is mining and resources and biotech are currently not within that circle of competence, so we look to stay a bit clear of those particular segments. But everything else is pretty much within our scope. So our approach is very much bottom up. We like to meet with management. We do a lot of work out in the field, talking to customers, understanding how the product is viewed in the eyes of the customer. So really get quite granular with the investments before taking a position. Obviously, the public markets, there's a lot of information that is available, and the reason why we're sort of focusing in on the emerging companies segment is that typically there is a lot less information that is out there that is known about companies. Investment houses and research institutions do not put out as much information and reports into some of these companies as the BHPs and the NABs of the world. So we feel that's a really unique opportunity for us to focus in on. And given our approach, as I just explained earlier, doing the bottom-up work, we feel we can uncover some undervalued and underpriced or mispriced assets. And we think it's particularly fruitful to play in that early stage space, given our expertise in those areas.
Absolutely. Sounds like there'll be many benefits from you almost nurturing these companies at their nascent stages. So you've talked about investing in the unlisted space. Unlisted space is a broader term that comprises of many entities that haven't made it to stock exchanges. Can you tell us about the kind of unlisted companies you might invest in, please? Yeah, so
at IPO there will be two particular unlisted entities that we have positions in. Both are technology software plays, and I suppose more broadly, Salter Brothers is, as you said in the intro, a global fund management business. We have divisions that operate across property, credit, and equities. And within the equities business, there is a venture capital fund, so really early stage seed investment exposure. And then we have a private equity fund, which is a little bit further up that growth curve, where companies are starting to move into that point where they've not only got revenue and customers and some predictability about future revenue, but they're also starting to reach profitability and thereafter. So those particular funds have a very significant weighting towards tech and services, but mostly technology. And that is, leveraging the Salter Brothers group and its various portfolio management teams and research analysts. The LIC will be able to tap into those resources and that proprietary deal flow that those funds do have. And we think will offer a really compelling opportunity for investors into the LIC to gain exposure to an asset class that is quite difficult to get into.
Well, diversification is certainly advantageous, and it sounds like you've got a very broad range of assets under your belt there. The startup space is quite vibrant, and you've mentioned that you do focus on that as well. What are the few important parameters that you look for in your investee companies?
Yeah, as I said, I think certainly at the earlier stages, we're really looking for that customer pull-through. So is this not only a great piece of technology, particularly at that venture capital stage, is this a great piece of technology? Is it into a market that we like? Does it have global appeal, which is really important to us as well? And then secondly, and most importantly, are there customers out there who are actually going to pay for us to supply them with this product or service? And that is one of the more difficult things to understand, particularly from an outsider's perspective. But that's the key driver, we think, to value accretion, and the ability for us to do the work and hopefully get to meet customers and have a really close relationship with investee companies is integral to that ability.
Exactly, those are very interesting insights, and especially post-pandemic. It would be so interesting to analyse more what makes the consumers tick in regards to the emotional and psychological drivers. The stock markets have seen huge rallies in the last 1 year, and thanks to the global liquidity. What are your views on it?
Yeah, I think if we cycle back 12 months, I don't think any of us expected to be in this position where we are now, where the stock markets are almost at all-time highs, property market's booming, the labour market has tightened. So I think, certainly from this time last year, fast forwarding 12 months, it's a remarkable position that we do find ourselves in. I think Australia is obviously really privileged with the way that they've been able to handle the pandemic. Clearly, the global equity markets have been underpinned by government stimulus, and secondarily the support from central banks in providing liquidity to the markets to keep them functioning as we need them to. So I think obviously volatility, and the last week saw a bit of volatility, particularly in the US, with some of the bigger names in the tech index selling off. So we expect that there will be continued volatility as global markets and economies emerge from quite significant lockdowns. But we feel that the positioning of our LIC is really going to be well placed to capitalise on this next wave of winners coming out of the post-lockdown phase.
Fantastic. Well, IPOs have certainly been trending in the last 12 months, as well as SPACs. So sounds like a good time to give it a try, and best of luck with it. Could you share with us a few of your investment success stories, please?
Yeah, so probably the most recent and relevant, given that obviously the conversation today has been mostly focused in on the unlisted space, but one of our both of our venture capital and private equity funds achieved their best ever exits in a particular investment into an Australian-based but ended up technology business that ended up being sold to a Nasdaq-listed tech company. So that generated north of 450% return over a 4-year period, and obviously the nature of the exit to that particular strategic reinforces the fact that we were thematically putting money into the right space, and that particular investment has already, from a financial point of view, had a great impact to our funds, but also from a validation perspective with respect to our approach to private and unlisted investments. It was a really significant moment when we were able to exit that company. So that's sort of on the unlisted, and then we've had similarly on our public equities side of the fund. We've had a couple of investments that have been subjected to takeovers, and the whole premise of our approach to all of these equities, but particularly with the ASX listed equities, is to find companies that we do believe are undervalued. And what tends to happen, I suppose, with takeover of public listed companies on ASX is third parties have also realised that a company is undervalued, and again, further enhances what we feel are really great credentials in the space.
Absolutely. As the economy scales, the smallest innovation on technology and practices are having some major impacts, especially in the cloud space and different other internet technologies. So it'd be really interesting to see how your companies develop with your new acquisitions. We're actually up to our last question already. It's been a very interesting discussion. I would love to talk more, but here's the last question for our audience. You run a concentrated portfolio comprising of 20 to 35 investee companies. Could you please shed some light on how your fund manager mitigates risk?
Yeah, that is a really good question. Our target portfolio holding is in that 20 to 35 investee names. It can go above, and oftentimes does go above that 35 name ceiling, and that could be due to a number of reasons, where there may be positions we're unable to exit because there's a lack of liquidity in the names, or there may just be not too many names that we want to move on. But as I said earlier, the team takes a very active approach, so it's not a sit and spray where we have a whole lot of investments and hope that across the portfolio some of them win. We do a lot of work on each individual name to understand what those value creation levers are, and we actively monitor each company on a daily basis to ensure that the information that we do have to hand reconciles to that original investment thesis. So that's from a mitigation point of view. We like to be pretty active in our approach. There's obviously, with respect to FX and interest rates, there is some hedging that we can and do in order to protect the downside. At the end of the day, we're in this to make a lot of money, but we also have a really laser focus on protecting capital as well, and it's sort of balancing those two that requires a lot of work, but we feel that the active management does help reduce that risk.
Absolutely, and I think from the experience we've gained from what's happened in the last 12 months, that would be totally very valuable at this time to help you moving forward with the ability to have accounts created so they can pivot and adapt to changes that maybe were unexpected. Well, sounds like a very interesting space to watch. Best of luck with your IPO when your initial public offering's asking minimum 20 million. And I hope it goes better than expected for you. That was a fabulous show. Was there any last words you'd like to share with the audience before we finish up, Ryan?
No, that's. I suppose the offer does close on the 19th, I believe. So Salter Brothers Emerging Companies.com.au is our website. You can download the prospectus and apply for for shares via that mechanism if there is interest. But we're really excited as a company. It's the first LIC that's come out of the Salter Brothers Group, and we're really excited to get this to the boards under the code SB2. And we're excited for the next phase of our journey as a listed company.
Thank you, Ryan. Sounds like you have a huge amount of combined knowledge and wealth supporting your moves forward. So best of luck, and we'll be watching this space. Thanks, everyone. That was Mr. Ryan Legudi, the Managing Director of Salter Brothers, who have an IPO open now. As Ryan said, please head to their website for more information and to gain the prospectus. And this is Sage signing off.